US companies are expected to post record earnings for the second quarter. Well, according to S&P, the energy, financial and information technology sectors are set for impressive results. So what does this tell us about the US economy, and what if these companies disappoint? Peter Dixon of Commerzbank is here with me now to answer some of these questions. Hello to you. OK, so first of all, we are expecting really solid numbers, aren't we?
Well, it wouldn't be the first time we've had solid numbers out of the US of late. I mean, the Q1 earnings were, well, they were a bit softer than we'd anticipated. We've had worse. You know, over the course of the last, let's just say 12 months, we've had some good numbers. I mean, OK, Q1 was weak, but generally speaking, the trend has been clearly upwards. And there's a pattern developing here, I think, which tells me, I think, that the first quarter tends to disappoint, the second quarter tends to make up for that, and then some. And then, you know, markets get all excited. But I think, to a large extent, it's in the price. I mean, S&P, as you said, have already pointed out that we're expecting record numbers. And under those circumstances, you know, I think markets have already factored that in. There is scope, I think, for individual disappointment when it comes to particular companies. But I think, on the whole, it looks solid enough, I think, to give the markets a decent footing over the summer. OK,
and those individuals, can you name any one of those that you think of?
Well, I mean, I think the tech sector is the most interesting one, because
ridiculously high at the moment.
It is phenomenally high, because, you know, if you look at the likes of Amazon, Microsoft, they're all going through huge changes. Amazon is effectively a big disruptor. It's recently gone into the retail space, of course, having bought Whole Foods recently. So it's up to something there. It's got a huge cloud business, which is clearly something which is it's selling to the rest of the business, if you like, the industry, and of course it is having a major impact upon the retail sector. Now the point is that Amazon is doing phenomenally well in that sense. It's piling up a huge amount of cash, as indeed are all the tech companies. And I think what that means is that a lot of these tech companies will have to think over the course of the coming sort of weeks and months, or possibly even years, about what they do with this cash pile. It's too big for them just to sort of invest in speculative projects. They either need to think about whether they need to give some of that back to their shareholders, or whether they need to put that to work in other tech-related areas. And I think the options in that field are fairly limited. So the interesting thing is going to be, what do they do with that cash pile?
And the point with tech industries is they have to continuously progressing in order to stay on top of each other, because it's such a fierce environment.
Well, that's right. I mean, and I think that, you know, you've seen the likes of Google, which have branched out into cloud computing as well. It's branched out into sort of driverless cars and all sorts of other areas. I mean, what you're seeing actually is the maturing, if you like, of some of these big tech giants from being purely tech players into, if you like, information technology leaders. That's going to be interesting to see how that pans out, because that starts to disrupt other sectors. It disrupts the likes of communications, it disrupts transport, it disrupts retail. And we're seeing a major transformation, I think, of the corporate landscape as a consequence.
I want to go dig into some detail on financials, because they kick off this Friday. We've got the likes of Citigroup, got JP Morgan as well. Financials, they are having to deal with low interest rates at the moment, but we're still expecting some positive numbers.
Well, I mean, look at the US. I mean, we actually have rising interest rates, to be fair, in contrast to here in Europe. So we are starting to see the yield curve move a little bit. That's a positive. The economy is in decent shape, if not fantastic shape. It's okay. People are prepared to borrow. So the industry itself is doing, you know, reasonably okay. And I think if you look at the markets businesses of some of these companies, they've actually surprised over the course of the last sort of 3 to 6 months in terms of, you know, how well they've done. So again, I think all of these factors are supportive of reasonable results from the financial services sector. But, you know, it is going to be incumbent upon, I think, the rest of the world joining in order to help drive their international business much more strongly.
Now, one sector that is really suffering, retail.
Which is surprising in a way, given that you know, the US consumer is performing reasonably well, unemployment's at record lows. The fact is, though, that, as I said before, there's a lot of disruption going on in the sector. A lot of the bigger players are finding that, well, the likes of Walmart, for example, are not able to generate the kind of leverage off the cycle that they once did, because they're under significant competitiveness pressures. And obviously what they're trying to do is minimise their cost structure in a bid to remain profitable. It's working to a degree, but it's not delivering the kind of results that perhaps they would have been able to generate in the past. And I think as a consequence, they're going to struggle for a while to come until such times as many of these disruptions in the sector have worked their way through.
Mm-hmm. And they're all trying to get online.
Well, indeed. I mean, online's where it's at. I mean, everybody's there already, I guess, and Amazon is the leader. Mm-hmm. But let's not underestimate the fact that there's still a role for bricks and mortar stores. I think one of the problems has been, of course, that the likes of Walmart and a number of other stores have perhaps overextended over the course of the past sort of 10 or 15 years, and the online transformation is catching them out. So I think as they go through this process of becoming a little bit less bricks and mortar and more online, they're going to perhaps underperform relative to the market.
Mm-hmm. And before we finish, I'd like to get some analysis on the energy sector and what you're expecting from this one.
Well, I think what's interesting is that the shale sector has done pretty well over the course of the last 6 months. Mm-hmm. They have benefited from this fall in oil prices because it makes their break-even costs that much lower. So they're starting to perform reasonably well, and I think that over the course of the next sort of 3 to 6 months that will continue. After all, the rig counts are going up. There's no sense that oil prices are going to rise anytime soon, so they're able to operate in this fairly low-cost environment, and I think as a result, they will continue to be a very important player in the US market.
Okay, Peter Dixon, we'll leave it there. Thank you very much indeed from Commerzbank today, talking about these US earnings that we are expecting once again.